I believe Tesla at these prices represents good value and marginally even like better if it keeps going down, especially when the stock market as a general on a micro level might cool off a bit, especially given the last couple of months of skyrocketing, mostly in the semiconductor space, but also other tech stocks. But Tesla hasn't obviously taken part in that bull run, and you can see that essentially over the past 2-3 years we've been sitting at the same prices. But why have I started to rotate more towards Tesla? Obviously, this is not investment advice, but I think this represents a good opportunity to look at Tesla, and I'm just sharing my own ideas with you. We can see that at the latest earnings report that the total automotive revenue came in at almost 21.5 billion US dollar. And the interesting part is that you can see that the energy generation and energy storage at 1.4 billion, and then services increased by 25%. Now the interesting part is that when you look at on a yearly basis, now it's really interesting. So you can see that automotive revenue increased by 15%. It's good. I mean, especially considering that the average selling prices has been going down. So yeah, the price has been going down because it's a lot of competition out there, and we are not in a macro level, on a personal finance level, with all these high interest rates. People are not like investing a lot of money in high value items like cars. So considering like the general market with high interest rate and also the competitiveness of the automotive electric car market, I think 15% revenue increase is really good. But the interesting part for me is these two lines, especially the energy storage, because this is something that we will see is coming with high margins, potentially much higher margins than the automotive, and we don't necessarily see the same kind of competitiveness in the energy storage business, because of that it's early in the stage and there's so much demand out there. Like, we've probably never seen anything like this. Like the amount of demand for energy storage, battery energy storage, is so high. So all of the global manufacturers of batteries would be able to produce as much as they can do now, and still they wouldn't satisfy the demand out there for many years, even decades to come. So I think this represents really interesting numbers here, that we start to see the increase of pace for energy storage for Tesla, and I'm really interested to see the numbers for next year. And one point here, you can see that looking at the EPS on a GAAP basis, and you can see that there's a big jump in Q4 of 2023, and this represents obviously by this one line here. You can see that there was a one-time non-cash tax benefit of almost 6 billion. And looking at the numbers again, you can see, there you can see that, yeah. So this 6 billion, if you remove those 6 billions, we are much more closely to 2.5 billion. And I would say that you would be better off to look at the non-GAAP numbers, and if you sum it up totally, we would get somewhere around 6 there, and then 12 billion income. 12 billion is a fairly realistic number if you don't consider this 7.9 billion, as I mentioned, because of this line here, the tax benefit. And that number gives us roughly, as of today's market cap, at 520 billion. You can see, it's basically this number here, price to earnings ratio of 38 times. So again, it's fairly expensive for a automotive company, but this is not any automotive company. This is the market leader in the electric cars, and with that comes obviously a bit of, let's say, higher valuation. But also this company has shown like ability to grow very fast. Like if you look at let's have a look at my charts here. So you can see on the dark green, although they look to lose a bit of market share, but that's nothing to be worried about, because still, like, look at the numbers. They lost market share from 2020 to 2021, but again, they doubled their output, and you can see that since 2020, Tesla has increased their number of cars sold by 3.5 times, despite losing quite a bit of market share. So don't worry about the market share. You should only look at, I think, this number here. And this is not fair, because BYD, which is the other one that's really been increasing fast, they are selling much cheaper cars. So it's not like apples to apples comparison. Yeah, let's have a look at the delivery numbers. You can see that they delivered 1.8 million, and for 2024 I expect somewhere around 2 million, 2.1 million, and that's good, especially given that, you know, we are in a stage where they have fully basically satisfied the Model 3 and Model Y demand out there, I would say. So they are now in a stage where we are waiting for the cheaper Model 2, if you say, and maybe next year or in a couple of years from now, which will add then, let's say, the second S curve, so the second fast increase of output. Maybe we can see like that Model 2 together with higher ramp ups of Cybertruck, which right now is, yeah, it's not quite a lot. You can see that Morgan Stanley expecting like somewhere around 108,000 Cybertrucks for the first 18 to 24 months. So yeah, we shouldn't expect a lot of deliveries of Cybertruck right now in the closest couple of years, but still there should be quite a few cars added there. And finally, I would also add that, yeah, the Model 2, when it's online, I think we should easily see a path to 4 or 5 million cars. But as I mentioned before, I'm not really looking at that right now. I think even 10% increase from 1.8 billion to 2 million deliveries in 2024 is good. What I look at is this here, the energy storage. So the storage deployed. You look at this. So we are at 1.6, 3, 4, 6.5, almost 15 megawatt hours. And they have told that they have a capacity, or they're building a factory with possible capacity of 40 megawatt hours, which would mean basically 3 times the capacity that they now have sold this last year. And this comes with really good margins. I think if you look at the margins for the other segment, you can see that they have gone from, yeah, negative 4.6% to positive 7.4% and 18.9% in the last 3 years. So we went from minus almost 5% in 2021 at these, let's say, 4 megawatt hours to 7.5% in the positive direction, and now at above 18% gross margin. So imagine what kind of gross margins they are possible to have in, let's say, 3-4 years from now, you know, when they are, let's say, selling 40 or even maybe 50-60 megawatt hours of energy storage. I mean, their revenue coming from non-automotive is gonna be quite big. Actually, we can have a look at that. So let's have some very rough estimate, but still. So you can see that they sold 6 billion in energy storage in 2023 on a basis of almost 15 megawatt hours. So if we, let's say, take that times 3 years from now, 4 years from now, we could almost see, like, you know, I don't know, let's say 15 to 20 billion just coming from energy storage business, with much higher, let's say, gross margin than the automotive, which I explained before. It's, yeah, the automotive, there's a lot of competition out there, so you should see a higher like pressure on the price. But I think energy storage is gonna have huge demands, that it already has such a high gross margins. So at 20 billion, maybe, although it's gonna represent still a minority of the total revenue. I mean, Tesla's for this year, they had like 96 billion of total revenue. So it's quite a big company. But again, like if you consider that out of those 96 billion total revenue, they would have maybe, I don't know, like 20 billion. You can see here 96 billion in almost 97 billion in total revenue. But 2 years from now, if they increase the automotive revenue from, let's say, 78 to 90, and then let's say 110, 120, but then the battery energy storage revenue at 15 to 20 billion would represent anywhere from 15 to 25%, 15 to 20% of the total revenue. But the gross profit will most likely be, I don't know, like 40 to 50% of the gross profit of the entire company. So what kind of gross profit numbers are we looking at? So again, this is a rough estimate, but looking at the yearly numbers, like assume that we have 20 billions in sales and we have increased our gross profit from the 18% on the battery energy storage side to, let's say, 30%. And that would put us, I don't know, like at 6-7 billion in earnings just from the energy storage business. And again, this is like just 3 years from now, but extrapolating into the future, the demand is definitely out there for a lot of growth in this segment. And to obviously not also look past the automotive revenue, the gross margin on the automotive has been going down over the past, let's say, year. But you have to know that this is due also to the price pressure. Like, you know, there's a lot of fierce competition coming from China. All these companies, like, you know, I'm following them on a weekly basis. You can see NIO, XPeng, Li Auto, BYD. There's so much competition, so much good cars coming out. So there's been quite couple of years of really tough pressure from the competition. But we have kind of started to see some kind of increases over the past month. You see here this article from Electric that they kind of started to increase the price, and then again they increased the price on the Model 3 again. And I think, like, if you think about the consumer market on the, let's say, in Europe and in North America especially, with high interest rates, as the interest rates will come down, which they will, at least in the coming year most likely, then the consumer will get more stronger, and they will start to be able to buy more luxury products like cars. And at that point, I think we have seen the end of the price drops for now, and that would definitely increase Tesla's margins. And you can see here, like, you know, you can see that the gross margin for the total company peaked at 2021, and this is at the time when we had, you know, you had queuing times if you wanted to buy a new electric car for up to a year. So yeah, you put your order today, you would get your car at the minimum 9 months from now. So that's why they were really strong car companies. They could price their companies really high. They could price their cars really high, and people bought them anyways. So that's why you see these high gross margins. And yeah, now it's been going down for a couple of years. But again, I told you, I think by end of this year, early next year, the gross margin will start to go back up on the automotive side, and definitely we will see a big help coming from the battery energy storage side. And in addition to that, they will also increase the number of volumes of cars sold. So that will also help to reduce the cost per car. So I think, considering everything, I definitely think is just, yeah, I genuinely think that these prices, although quite expensive on a PE ratio, but you have to consider that this is a growth company. They will definitely increase their earnings year by year. Maybe not in the coming 18 to 12 months because of, let's say, extended price pressure, if let's say if the interest rates take a long time to come down, but most likely in the 2 to 3 years time frame, when everything is good in the consumer side, this PE ratio will be just chewed down, and, you know, they will start to earn much more money. I expect them to make at least 10 billion. Let's say 5 years from now, easily I can see them make 10 billion only from the energy storage side. So basically, if you think 4 or 5 years from now and you have a company of 520 billion, if they make 10 billion on the energy storage in 2028, that's like PE ratio of 50 times only on energy storage, and you are not even considering any other business in the Tesla, like, you know, let's say the automotive, obviously. And to be honest, I'm not trying to be one of these super bullish guys that talk about the FSD, self-driving, and, you know, the Tesla robot, the Optimus program. I believe in some of those, but yeah, I think, like, we should consider it when we see real revenues coming in from those segments. At the moment, it's Tesla Energy and Tesla Automotive, and I, on my part, think it's very good time to look at Tesla. But again, this is not investment advice, and yeah, thank you for watching, and see you in the next one.